Rise in Q2 pushes up the full-year guidance. Its business momentum remains strong.
IT index surges over 3% with the Midcap Stocks leading the charge. Stocks like Persistent, Coforge surge 10%. Others follow. Hello and welcome to Markets Forward, your go-to show where we'll tell you all the key data points about today's trading session and gear you up for tomorrow. I'm Nigel. With me, as always, Surbi.
Well, the bulls would be a little disappointed with the day, Nigel, I guess, because they were hoping that they'll have a bit of a reprieve, some bounce, but that wasn't to be, at least not on the large cap screen today.
Indeed, it was a volatile day of trade. You know, we started off, we were down, I remember, close to 90 points in the first minute. And by the fifth minute, we already had moved into the green. So that was the kind of volatility that we saw. And actually, that graph tells you the picture. Because between 10:30 to around 1:30, the bulls had it actually. And we were bracing ourselves for a good close. But then it seems the FIs, they must have woken up a little bit late and they were sold into this market. And we ended off the high point of the day. We were down 35 points. But the positive today was that there were many positive earnings surprises. Max Financial did very well. You had the Bajaj twins as well that did well. Select IT names, they delivered positive earnings surprises. And ultimately, earnings is going to drive the markets higher. So it's good to see that after a while, we got some positive surprises on that front. The problem, though, is the two-wheeler space. Bajaj Auto, the street was quite disappointed with those numbers. And now TVs Motors, well, that was a bit of a miss in today's trade. And that stock came out substantially from the high point of the day. Even post that correction, it's still up close to 25% for this year itself. So we'll wait by to see what kind of commentary comes in from TVS Motors. The biggest positive today, though, Surbi, was the breadth of the market. By the time we wound up, more number of stocks are advancing than declining. And that's why your portfolio is feeling good.
No, that's true. And that's the silver lining, the fact that mid-caps were not bleeding as badly as what we've seen in the last couple of sessions. And some of the good earnings, they were actually rewarded very well as well. But the problem is that this market has become a bit of a sell the rally market. It's no longer a buy the dip market. And at higher levels, there is fresh supply that's coming in. And that seems to be the sort of key point to track. Any sort of earnings misses, they are getting very, very badly punished. And also the FPI selling overhang, that continues to be a huge sore spot for the market. Today, I mean, a case in point would be, let's say, when TVS Motors came out with numbers, the stock was absolutely hammered. And not just TVS. Sentiment moved so quickly that it led to more selling on other auto names as well. And we'll talk about that as we go forward. The silver lining, obviously, was IT, particularly mid-cap IT. Wherever the performance was solid, wherever the margins were intact, stocks rallied 6, 7, 8, in some cases 10, 11%. So IT was that comforting part for the market today. But for the large cap screen, like we're saying, it wasn't quite enough. So let's tell you, there's plenty to cover, lots of movers and shakers. Hormaz will break it down in terms of the individual stock action for us. Then the stocks that we'll put the spotlight on today include Bajaj Finance, Amber and Paytm, all of them reacting to either earnings or news flow. After that, we'll, of course, dive into a lot of the important events and the key earnings to watch tomorrow as well. So lots lined up. Let's buckle up, and it's over to Hormaz for the stock-specific action.
Well, even after having green on the screen, there was always this slight bit of wariness that it might get sold into, and that's exactly what happened on the benchmark indices, and that ended in the red. The broader markets off the highs, but still ending in the green. You spoke of earnings, and the earnings comfort did come from IT with Persistent and Coforge leading the pack. Both of them ending 11% higher in today's session. Amber Enterprises ending at a record high. SRF, good management commentary, but ending off the highs of the day, ending 3.5% higher. And Max Financial too having a good day at the office. Some negative earnings reactions that continued on the extreme end as well. And Chennai Petro was leading the downside today with 11% down. TVS Motors, you just spoke about that. M&M Financial at one point was down almost 7.5%. Then KPIT Tech ending at the lowest point of the day, as did Indus Towers. But the impact of Persistent and Coforge rubbed off on the entire mid-cap IT basket. And take a look at this. First Source, Oracle Financial, almost all of these mid-cap IT names ending with gains of anywhere between 4 to 8%. A sector that was under pressure today was capital goods, and a lot of other sectoral indices were also under pressure, but this stands out simply because it has been under pressure over the last few days. Siemens and ABB both ending at the low point of the day, ending with losses of close to 6%, and BHEL, NBCC, Thermax also seeing some red in today's session. And lastly, stocks that did well on the back of very strong volumes, and Paytm was one of them. At one point was up 11%, but still ending the day with 8% gains. BLS International, Deepak Fertilizer ending 16.5% higher on very strong volumes, and GMDC and PNB Housing also having a good day at the office. Back to you guys.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's welcome our guests. We have Mayuresh, Joshi, Head of Equity Research at William O'Neill, and Shrikant, Chouhan of Kotak Securities, who joins in. Hi, gentlemen. Thanks a lot for joining in. Shrikant, you go first. Tell us about the Nifty. How do you see things, pan out? We had Lawrence Blanco earlier today, and he was saying that he believes maybe a 5% correction is in the works before the end of this year. Do you think structurally it's still down?
Yeah, good evening, Nigel. Good evening, Surabhi and Mayuresh. I think, the structure of the market is certainly showing a lot of weakness. It was holding well above the levels of 24,700, but the way we saw sell-off from the levels of 26,000 to almost 24,700 without any recovery or any pullback. One thing is very clear, that the market is heading lower. And after that also, when the consolidation was there, it was at the lowest point of that particular fall. So when looking at this structure, yes, there is a possibility that we could see the levels of 23,800 or 24,000 in the near term. And in the worst case scenario, there is a possibility that we could even see the levels of 23,000. But in the near term, 23,800, 24,000 is the area of support. And from there, we can see some rebound in the market. But at this level, at current levels, we are at in-between levels. And further fall is more likely in the near term. For the Bank Nifty, then also we saw very a sluggish sort of activity. And there also we are expecting 50,500 or 700 sort of levels.
Okay, got it. 23,800, 24,000 crucial near-term support. Well, let's focus on the top gainer then. Bajaj Finance. That one was up and about in today's trading session. Good numbers is what they reported. Abhishek joins us to break it down for us. Abhishek?
Bajaj Finance has raised their FY25 credit cost guidance to about 2.05% from the earlier guidance of 1.75 to 1.85%. However, the management says that the credit cost has peaked for them in Q2 FY25. So with reference to their asset quality, gross NPA in absolute value increased by 29.4% sequentially, and the gross NPA ratio has come in at 1.06% versus 0.86% in the previous quarter. With reference to the PNL, both the NI and PAT were largely in line with our poll till yesterday. In October of 2024, Bajaj Finance stock price had fallen by 15% versus 5% decline in Nifty. So largely street was anticipating a rise in credit costs for Bajaj Finance with respect to their performance. So brokerages say that stability in net interest margin is the key positive. Now Bajaj Finance will benefit from new product launches and easing rates. So valuations as per brokerages are right now attractive for investors. Morgan Stanley has written on Bajaj Finance. They have an overweight rating and a target price of 9,000 per share. Jefferies has a buy call with target price at about 8,400 per share.
Okay, all right, Abhishek, thank you very much for that. Let's talk about TVs Motors. That was a clear disappointment in the afternoon. The numbers came through and most of them missed the estimate. The stock took a nosedive immediately after. So what went wrong? Sudarshan is joining in with the fine print. Sudarshan?
So it's a top-down miss for TVS Motor. It has missed estimates on all the front. If you talk about the profit, it was up 23% year-on-year, but it's below our estimate of 700 crore. Revenue has come in at 9,230 crore against our estimate of 9,465 crore. EBITDA again, it's up 20% year-on-year, but against it's at 1,080 crore against our estimate of 1,133 crore. Margin has come in below 12%. It's come in at 11.7% against our estimate of 12%. Now, what are the reasons? First, if we look at the realizations, it's down both year-on-year and sequentially. Year-on-year, it's down 1%, and sequentially, it's down almost 3%. Gross margin, though, remains steady around 28.5%. So now, in the management commentary, we will have to see what the management says about the demand outlook and how is the demand during the festive season, because more than the numbers that we have seen from TVS Motor, now the focus would be on the commentary.
Okay, all right, got that. Thank you, Sudarshan, for the details over there. While TVS was down, the bright spot in today's trading action was the IT space. The IT index was higher and mid-cap IT stocks, soaring anywhere between 10 to 11%. Names like Persistent Systems and Coforge did really, really well. Rima standing by with the earnings boost that some of these names have got.
So Persistent is a stock which has done very well. 50% up this year, 95% in the last 1 year. And the key reason is strong growth. For the last 2 quarters, the company's top-line growth has been in excess of 5%. And going forward also, the management appears to be fairly confident about the momentum. Even a high-tech vertical, the telecom media vertical, which has lagged the company's growth rate, is recovering. So growth going forward will be fairly secular. And the company is confident about its $2 billion aspiration, top-line aspiration by FY27. Now, Coforge was another big mover. And here again, it was a beat, much better than what the street was anticipating. So the top line was boosted by the Cigniti acquisition that they did. But even the organic growth was a 6.3%. And the company is confident that this momentum will sustain in Q3 and Q4, which are otherwise seasonally weak. But considering that their 12-month executable order book is up 40%, they're executing smartly, there is momentum, the company is confident about going forward. Now, the Cigniti acquisition, which the street was skeptical about, is also turning out to be a valuable asset. So 6% top-line revenue growth, even the margin performance, they could end Cigniti's margin. They could end the year with Cigniti's margins hitting 18% higher than what they had earlier anticipated. In fact, in the management's own words, FY25 could be a standout year. Now, Zensar also felt the upward momentum, despite the numbers being okay. Their top line was impacted by furloughs in the telecom media segment, but the company said that in Q3, the impact of furloughs will be less than what they had seen in the prior quarter. Margins will be in the mid-teens band, in a tight band, and they also said the pipeline is good. The company is working on a couple of large deals.
Okay, all right, Rima, thanks a lot for that. Well, Mayuresh, I wanted your view on TVS Motors. You know, after Bajaj Auto, this one as well seems to have disappointed. But, you know, part of the street believes that it was a bit of an overreaction today. Though in comparison to our poll, it was a very weak set. Your approach to the stock?
So yeah, the numbers have been soft, Nigel. No two ways about it. But the earnings the earnings outperformance that the stock has delivered over the past few quarters has put the stock in top quartile territory. And therefore, I think any earnings miss is supposed to be a big disappointment for the stock. However, I think what the management commentary will be going forward, how are they looking at the festive season? How are they looking at the inventory pipeline? What are they thinking about the new launches that are expected to come through? And do they see a recoupment in margins to happen in the second half and in the next financial year as well, persisting for the numbers itself? I think all those aspects will be very, very important. So I think, yes, a knee-jerk reaction shown on soft numbers. But if commentary remains strong for the second half and for the next few quarters to come, I think there should be a good bounce back in the stock to come through. So I think it all really boils down to our commentary.
Okay, all right. Got that, Mayuresh. Let's quickly move on and look at some more interesting earnings reactions. Amber Enterprises rallied over 14% after reporting quite strong numbers in the second quarter. The performance of the company was driven by RAC demand and lower channel inventories. The company reported a profit of 19 crore rupees over a loss of 6.9 crore rupees last year. Upasna is here with the details. Upasna.
Well, Amber Enterprises reported strong set of numbers, revenue and PAT above poll estimates, while margin came in line. Revenue saw an uptick of 82% on a one-year basis. EBITDA margin stood at 6.7% with an uptick of 30 basis points, and PAT stood at 19.2 crores versus loss of 6.9 crore. Now, management commentary remains quite upbeat. Management says prolonged summer and low channel inventory led to a robust growth in RACs, and this year marks as the best year for AC industry in last 40 years. AC industry can grow at least 3 to 3.5 times in the next 5 years is what the management has highlighted, and it expects AC industry to grow by 30% in FY25. It also believes that the Amber will outpace the industry growth rate in H2 FY25. And coming to Sidwal, the management has updated that the greenfield expansion is on track and margins will come back. Coming to CAPEX, FY25 CAPEX is planned at 350 to 375 crores. And in terms of revenue guidance for FY25, it remains conservative at 25% and ROCE at 15%. For electronic division, the management has guided a revenue growth of 45% for FY25 and expects margin to range between 7.75 to 8%. The company also plans to invest 650 crores for advanced manufacturing technology for multi-layer PCBs, and company has also gone ahead and commented on JV with Korea Circuit. It believes that this will give company access to mobile, IT module and semiconductor industry as company aims to become a significant PCB player in the near future.
Okay, all right. Thank you for that, Upasna. Let's move on. Paytm actually had some interesting news flow around it. The company, of course, came out with the numbers, but not just that. The company is now saying that the parent entity, 197 Communications, has received NPCI's approval to onboard new UPI users as well. And the market liked the sound of that. Stock was up about 8.5% today. Ritu has more details on this development. Ritu.
Well, relief for Paytm as the National Payments Corporation of India has granted 197 Communications, which is the parent entity of Paytm, approval to onboard new UPI users. And this comes nearly 9 months after the RBI had barred the company from adding new customers. The approval, of course, is contingent on OCL adhering to all regulatory guidelines and NPCI norms. Now, keep in mind, Paytm's UPI market share did take a hit during this 9-month embargo, dropping from 13% in January to about 7% in September, although it remains the third largest player in the UPI ecosystem. Its monthly transacting user base had also fallen to about 6.8 crores in September because of this ongoing migration and the ban on adding new customers until now. Now, OCL had earlier received NPCI's nod to operate as a third-party application provider with about 13.5 crore UPI customers already migrated onto its platform supported by 4 banks. And this nod now to onboard new users is going to lead to an increase in UPI transaction volumes and allow Paytm to cross-sell financial products as a distributor. In fact, yesterday you had founder Vijay Shekhar Sharma speaking about the massive opportunity UPI presents for the company during Paytm's earnings con call, emphasizing that Paytm was not here to become just another mediocre or fringe player, but to solve for the problem of concentration risk in the UPI ecosystem.
Okay, thanks for that, Ritu. Well, let's get back to the top stocks today in terms of earnings reactions. Max Financial Services was one such stock. Yash joins us to give us all the top points as to why the stock reacted so positively. Yash?
Well, Nigel, as far as Max Financial Services is concerned, it was a great quarter for the company. A top-down beat coming in for Max Financial Services. You speak about total AP, retail AP, VNB or margin. All of them were ahead of street estimates. New business premium grew by 25%. It came in at about 3,016 crore rupees. The poll was about 3,015 crore rupees. Total annualized premium equivalent, that grew by 31% year on year. The number that came in was about 2,170 crore rupees. The street was working with a number of 2,111 crore rupees. Now, retail annualized premium, that also grew by 34% on a year-on-year basis. Importantly, value of new business saw a growth of 23%. The street was working with a number of about 472 crore rupees. The number that came through in the quarter was 512 crore rupees. Value of new business margin. All eyes have been on the margins for life insurance companies. On a year-on-year basis, it was down 157 basis points, but it did beat the street estimates. The street was working with a number of 22.36%. The number that came through was 23.6%. Explains why the stock was buzzing in trade today.
Okay, got that. Yash, thank you very much for that. So let's quickly go back to our guests for some thoughts. Mayuresh, we just, had a look at a raft of earnings over there. Any thoughts? Amber, SBI Life, quite a few names, even Paytm, of course, making it to the headlines today.
No, so I think players like Amber, Dixon, Keynes, all the MS guys should continue doing well. Obviously, they've got a huge tailwind of PLI incentives behind them. And therefore, I think as their entire backward integration processes become more robust and more vertically integrated, a large part of both the ODM business, which is going to be also a key defining factor for these companies, and the new business through the PCB more, specifically as the semiconductor market evolves in India. I think these can be two huge business opportunities, along with PLI and the added incentives of backward integration. So yeah, I think these players should continue doing well. Life insurance, as Yash mentioned, Max, superb set of numbers. SBI Life still to get into the internals. But largely, I think SBI Life, Max are somewhere where the product mix probably sounds favorable. Max has got a good favorable base as well. Expectations of the commission charges or the overall expense ratio probably remaining a lot more subdued for a player like SBI Life probably can be a huge earnings driver as the product mix rationalizes and evolves going forward. So yeah, SBI Life, Amber, Dixon, I think they can probably hold out in terms of earnings estimates.
Okay, all right. Appreciate you all joining in, gentlemen. Thanks a lot for giving us your comment on the markets as well as individual stocks. We'll slip into a short break. On the other side, we'll get you all the top corporate voices. And with also, we'll get all the top events to watch for tomorrow. Stay with us.
Welcome back. Let's take note of the top corporate voices that we heard during the course of the day. Coforge expects FY25 to be a standout year. The company has reported revenue growth of over 26%, led by the Cigniti integration and an organic revenue of 6.3% in the second quarter. The management also guides for Q3 and Q4 to be strong despite the weak seasonality, led by a 40% jump in 12-month executable order book. And secondly, the execution momentum. Cigniti, the company that they have acquired recently, has now enjoyed a 6.1% revenue growth in the second quarter. The management expects Cigniti to end the year with the 18% versus 16.5% growth earlier.
And Persistent Management told CNBC TV that the order booking in the pipeline points to a second half being better than the second half of last year. But they refrain from giving guidance. They expect even technology sector, whose growth has been slower than the company average, to pick up steam going forward, driving secular growth. They also want to be at the same margins as last year, and their medium-term aspiration is to grow margins by 200 to 300 basis points over the next 2 to 3 years.
Before we wrap, let's get you some key market events to watch out for tomorrow. Vamakshi is here with the list. Vamakshi.
Well, lots to watch out for the trading session tomorrow. India will be reporting Nikkei's S&P Global Manufacturing PMI data as well as the Services PMI data. The US will be reporting their initial jobless claims, Manufacturing PMI and Services PMI. But apart from that, lots of stocks in focus on the back of earnings. We have three major Nifty counters reporting their numbers tomorrow, which includes NTPC, ITC as well as IndusInd Bank. There are several others as well that will be in focus on the back of its numbers, and that includes ACC, Adani Total Gas, Adani Wilmar, Colgate Palmolive, Dixon Tech, Godrej Consumer, GSW Energy, Laurus Labs, Radico Khaitan and United Breweries. But apart from that, another big event that is scheduled tomorrow, SEBI Chief Madhvi Puri Buch will be appearing before the Public Accounts Committee of the Parliament.
Okay, all right. Thanks a lot for that, Vamakshi. Well, on that note, we'll wrap up on this edition of Markets Forward. We'll be back, though, with more news and updates on the other side.